supply question. With a total limit of 21 million issuable coins, the rate of increase in available Bitcoins is not keeping pace with the number of people keen to buy them. So the price of a Bitcoin keeps increasing. Because its price increases, people feel reluctant to use them as currency by spending them. So with Bitcoin supply constrained and falling short of demand, do the supply side dynamics prevent Bitcoin from functioning as a currency?
Yeah, so my view here is Bitcoin's the ideal architecture to be a currency and gold isn't. I started my career modeling commodities, and the history of commodities is as the price goes up, the demand decreases, the supply increases. Gold is a commodity. Bitcoin is a scarcity. As the price goes up, the supply is constant. Historically, all commodity businesses, they need a cartel to be stable. John D. Rockefeller formed a cartel. OPEC is cartel. The De Beer Diamonds cartel is the same. If you look at just about everything in the world, you have to have some kind of restraint of trade. If you can't get it legally through patents or technically through some special sauce, then you have to get it another way to make the price go up. Otherwise, the price doesn't go up. If we build a dynamic model of gold, it works like this. The price goes up. The miners increase output. Jewelry demand decreases. Scrap and jewelry get recycled at increased rates. Bankers and financiers sell more gold derivatives short, and they're more aggressive about it. Investors fund more mining development and mining expansion. Miners come online. Capacity comes online. Miners sell more gold. Eventually, the price goes high enough. The government stops buying gold. They start selling gold, or they short the gold. The price comes down. That's the problem with having 90 kilotons worth of gold as jewelry and so many tons of gold sitting in central banks. It's a damping feature. When the price goes up by a factor of 20, everybody on earth is trying to make the price come down, and they have a lot of tools to do it, especially because there's no quick link or tight link between paper gold and physical gold. If you look at the dynamic model of Bitcoin, the demand goes up, the price goes up, mining stocks go up. Miners stop selling Bitcoin. Miners start buying Bitcoin with equity and debt, which keeps going up. Investors buy Bitcoin. Companies buy Bitcoin with equity and debt, like my company, which borrowed $1.7 billion at nearly zero interest to buy Bitcoin. Banks can't short the Bitcoin. Governments don't have the reserves to sell to short the Bitcoin. The government has less motive and less capability to manipulate the price down because they don't have it. They can't sell it short. The banks, the mutual funds, the insurance companies integrate and they market the Bitcoin. Big tech, eventually Apple, Google, and Facebook integrate and they market the Bitcoin. And investors buy the Bitcoin. Then they get more investors to buy the Bitcoin. The Bitcoin price goes up. The investors, the companies, and the countries buy the Bitcoin. Gold mining requires $100 billion a year in fossil fuels, labor, chemicals, and environmental damage, and the never-ending struggle to inflate the gold supply and undermine the price. It's providing zero security, transport, or audit service, and that would cost tens of billions more. I've watched 100 interviews by David Lynn, and I feel bad for him. He keeps waiting for gold price to go up. And he says on 3/15 of this year, he says, in a rhetorical question, musing, what if miners stopped mining gold? And he knows the answer, which is if the miners stopped mining gold, gold would be a good investment. And every gold investor knows this. Bitcoin mining requires $2 billion a year in electricity, $2 billion a year in hardware to provide full security, transport, and audit service for the entire network worldwide. It scales to hundreds of trillions of dollars of assets and annual transfers. It'll support billions of users, billions of nodes, 100 million transactions a year. And it provides the base layer for tens of billions of instant transactions per day on the application layer, i.e., Bitcoin mining is a good use of energy. Gold mining is a destructive use of energy if you're a gold holder versus a Bitcoin holder.
Thank you, Michael.